Just yesterday, I believe, Elon Musk said that he has a super bad feeling about the economy.
How's it going, everyone? This is Daniel. In this video, we are going to be talking about Tesla stock, the overall stock market, why we sold off on Friday. We also going to be hearing from Cathie going over exactly what she thinks about the recent comment that Elon Musk made, which is he has a super bad feeling about the economy. We're going to go over a look at that and also talk about exactly what to expect for Tesla stock, the overall stock market for next week. So make sure you stay tuned. We're going to talk about all this important information in this video coming up. As you can see over here, we have Tesla stock that's down 9.22% on Friday. Unfortunately, we were trading very good for till Friday. We were going to be up 9%, but after we got information about Elon Musk stating that he has a super bad feeling about the economy, we sold off aggressively, and we're going to be finishing the week down 2.72%. So it was relatively an aggressive sell that happened on Friday. When you compare Tesla to the overall stock market, as you can see, we have Tesla that is relatively sold off aggressive, 9.22% to the downside. Apple also down, Google, Microsoft. The only sector that performed relatively good was the energy sector. The sell-off was also fueled by what Elon Musk had to say. As you can see from the headlines, Tesla, Musk feels super bad about economy, needs to cut 10% of salaried staff. So that was a relatively bearish comment that he made with the economy. We also have some important economic data that we had on Friday. We had non-farm payrolls that came in higher than expected. Unemployment rate also that ticked up a little higher. We're expecting 3.5%. We got 3.6% for the month of May. So as you can see for Tesla stock, we were sitting at a pretty decent price above $750, but unfortunately we gapped it down and we sold off, and now we're sitting close to the support area that we're watching, which is around $700. Also, the overall market unfortunately also gapped down and rejected the $415 that we're watching as a resistance support area. It will close below it, so it's going to be really interesting to see what could potentially happen for next week. So for Tesla, we're looking at the $700 as a key support area. Unfortunately, if we get a breakdown next week, if we have a continuation sell-off, we might potentially see Tesla stock trading again within this range of $700 to $650. So that's going to be another key price point level to watch going into next week. But let's talk about what Cathie had to say about Elon Musk's super bad feeling, what she is anticipating, what she's expecting, what she thinks about why he said it. So we're going to be hearing from her. She does In the Knows on her YouTube channel. We're going to be talking about it. We're going to be watching a clip from that In the Know video that she posted. She goes over talking about Tesla, what to expect, and what Elon Musk said about that. And we're gonna be watching that clip from that video.
Had some very interesting comments on the economy by business leaders. Just yesterday, I believe, Elon Musk said that he has a super bad feeling about the economy, and we're trying to figure out what he's looking at. We know his own sales were up. Tesla sales in the month of May, I believe, were up globally 60%, and almost every other auto manufacturer sales were down, and some of them down by a lot. So it's not his own sales, except perhaps at the margin, maybe something that he's seeing in orders. He may be reflecting on the decline in total auto sales. So that's interesting. Jamie Dimon at JP Morgan talked about a hurricane. Be prepared for a hurricane. He doesn't know what kind of hurricane. Is it going to be a mild one, or is it going to be a Hurricane Sandy, which would be quite serious? But I think he's changed his tune a bit in the last month since JP Morgan reported earnings. So what is he saying? Well, he sees a lot of business activity and must see it slowing down, if I had to guess. And the president of Goldman described this environment as a confluence of shocks that in his career has been unprecedented. So again, he has a very good perspective, global perspective, every sector. And so I would say at the margin, these three business leaders are seeing the economy in some in some form of stress. Now, one of the issues we've been focused on with you on this video is the inventory buildup that was likely, and we'd been saying that through the last year, and it took a while to get through some of the supply chain issues, but now we are seeing inventory increases, the likes of which I have never seen in my career, and I'm talking about on a company by company basis. So Walmart, as Nancy and I mentioned in this last YouTube video, Walmart sales up 3% on a comparable store basis year over year, which means they were probably down in unit terms. Inventory is up 33%, which probably means in real terms, taking away inflation, they were up 25 to 30%. Well, that's interesting because more than half of Walmart's sales are in groceries, and you're not going to see huge inventory buildups in groceries. And so what does this say for the other half? Are their inventories up 80%? It's kind of crazy to think that that's a possibility, but it's a possibility. And Target's inventories were up 42%. Now it has less in the way of groceries as a share of the total. So 42%, maybe if you X groceries, was up 50 to 60%. These are crazy numbers for two of the best managed companies from a supply chain management point of view in the world. And so maybe a Jamie Dimon is starting to see this backing up in other ways. Surprisingly, auto sales. Now, the auto manufacturers finally are getting through supply chain issues. And according to Ward's, their plans were to increase production, or they're in the midst of increasing production, to something like 20% this quarter. And what we got this week was kind of surprising. Auto sales dropped back down from 14.3 million. Now, steady state is 17 million. So they had not even gotten back to steady state, which is 17 to 18 million. And that's an annualized unit rate per year for the US. So 14.3, and the expectation was that would just continue on up to a more normalized rate. Well, instead, in May, it appears auto sales dropped 12.7. So here we are again. If they build the inventory and the consumer does not come, in fact, the consumer retrenches, these companies are going to have too much inventory. What a surprise, given all the supply chain issues we've been hearing about.
So that's going to be it for the video. If you have any questions, any comments, make sure you drop it in the comment section below. Make sure you hit the like button. Of course, if you're new, make sure you subscribe to the channel and also participate on the poll that is posted on the community tab. I'd really appreciate it. We have until Tuesday. I'm probably going to be closing it on Tuesday. So I'd really appreciate that if you participate there too. But I'll catch you guys on another video tomorrow. Have a wonderful day.